Today, we're demystifying credit scores. I'm breaking down Credit Score 101, what the number actually means, what matters, what doesn't, what impacts your score, and 5 hacks to boost your credit score fast. Because having a great score can improve your financial life significantly. It can get you into a better apartment quicker, buy a home, get a better interest rate, refinance debt, and get approved for premium credit cards. Quick context on why I'm the one telling you this. My score is 807 right now. It wasn't always. And the thing that moved it the fastest is the first hack I'm about to show you. And before we start, if you have to take one thing away from this video, just know that your credit score is not a measure of your self-worth. It's a measure of credit score models interpret your borrowing behavior. And that's it. Before we get into the hacks, let's start with the very first thing. What is a credit score? It's very simple. Credit score is basically a number that helps lenders estimate how likely you will repay the borrowed money. In the US, the most commonly used number is through FICO, and that ranges between 300 to 850. And FICO says this number is generally made up of 5 different categories. And here's the breakdown. Payment history makes up about 35%, utilization another 30%, length of credit history 15%, credit mix 10%, and new line of credit another 10%. So right away, you can see something really important here. It's not about being perfect in all areas. It's about focusing on what's really impacting your credit score. Payment history and utilization make up about 65% of your FICO score. So if you want to boost your credit score fast, this is actually where I would spend my energy. Now you know the basics of the credit score and how the number is made up. We're going to walk through 5 different hacks. Hack number 1 is pay your credit card before the statement closes. This is one of the fastest way to improve your credit score because we're targeting credit utilization that makes up about 30% of your credit score. Credit utilization is how much of your available credit you're using. For example, if you have $10,000 credit limit and have a $3,000 credit balance, your credit utilization is 30%. Experts commonly recommend having the credit utilization below 30%. Experian also notes that lower utilization is generally better, and people with higher credit scores tend to have single-digit utilization. And here's the thing that people tend to miss. Even if you pay your statement balance every single month, your credit score can still be impacted if your statement closes with a higher balance. Let's say you have $10,000 credit limit. One month you spent about $6,000, which is higher than your normal amount because you had extra expenses, and you pay that balance in full by the due date. If your credit card reports $6,000 for that month, your score may still be impacted because your utilization will now show 60%. So it can hurt your credit score temporarily if you're trying to get a new credit card or even a loan. So here's the hack. Instead of paying everything by the due date, try to make a payment right before the statement closing date. The statement due date is when you have to pay in order to not incur any interest and any late payment fees. Statement closing date is when the credit card closed the balance and that balance gets reported to the bureaus. If you want to show low credit balance for that specific month, just make sure that you make additional payment before the statement closing date. This is one of those credit card hacks that just seems too easy, but a lot of people don't know about, and it's very simple. You're not spending less, you're just controlling when the balance gets reported. You can actually open up your credit card app and see 2 different dates. There's often the due date, which will likely be on top. Usually on the bottom, it shows the statement closing date. If you can't find it, you can look at your PDF statement or you can call the issuer. And let's jump into hack number 2. Automate every single payment. This one may sound kind of tedious, but it's also most important because payment makes up about 35% of your credit score. And that means even if you miss one payment, that can really hurt your credit score if it's longer than 30 days. Real life is messy. We all are busy. I totally get it. So the system is do not rely on memory. Set up the auto pay for at least the minimum payment for all of your credit cards so you don't have to think about when your payment is due for every single card. Ideally, set up an auto pay for the full balance, but if you can't do that, at least do it for minimum payment. Hack number 3, do not close your old credit cards without a plan. Here's a big myth. A lot of people tend to think that they need to close an old credit card because they haven't used it in a while. Closing a credit card can reduce your overall available credit. And if you close it, it will impact your utilization. So let's say you have 2 credit cards. Card 1 has a $10,000 limit. Card B has a $10,000 limit. So together you have $20,000 in available credit. If you usually carry or report a $2,000 balance, your utilization is 10%. Let's say you close card B and you still have the same $2,000 balance, but now your total available credit is only $10,000. So your utilization jumps from 10 to 20%. Nothing about your spending has changed, but now your credit profile looks a little different. So now, does this mean that you should never close a credit card? No, absolutely not. I've closed credit cards before. Closing an old credit card can also impact the age of your credit profile. So before closing a credit card, just ask yourself, will this impact my utilization in any way? Is this one of my oldest accounts? If this is one of your oldest credit card, I would just pause and think before closing it. Does it have an annual fee? If you can downgrade to a no annual fee card, I'll probably do that before closing it, just so that you can still have that overall credit limit. Doesn't really impact your utilization. And if you're paying annual fee before, now you don't have any annual fee. I have an old credit card that I have opened with my credit union long time ago. This was like 10 years ago at this point. I just pay one of my streaming services on there and auto pay every single month. Next, credit card hack number 4, ask for credit limit increase. This can be one of the easiest and fastest way to lower your credit utilization without changing your spending. Let's say your credit card has a $5,000 credit limit and you usually report about $1,500 balance. That's about 30% utilization. And if your credit card limit increases to $10,000, but your balance remains the same, now your utilization is only 15%. Same spending, but better ratio. A few caveats before you reach out to your credit issuer. First, do not request a credit limit increase if you know that's going to tempt you to spend even more money. Know that this is not free money. It's not a lifestyle upgrade. It's just to help with your spending power and help increase your credit score. So a credit limit increase is useful if you have discipline and want to improve your utilization. Also check with the issuer whether they do a soft pull or hard pull when they do credit limit increase. A soft pull does not impact your credit score at all, but a hard pull impacts it temporarily. So just check before you request it. This hack works best for people who have a solid payment history, have had the card for a while, also have the income that can support the increase. This happened to me a couple months ago, actually. Sometimes if you have a good payment history and constantly use the credit card, they will increase your credit limit without you asking. And last hack number 5, check your credit report for any errors. This is definitely less glamorous, but it matters. Sometimes your credit score is impacted by something that is not even accurate. This happened to me last year. One of the bureaus reported that I had a collections account when I didn't. 2 of the other bureaus didn't report that, so I immediately reached out to the bureau to correct it. That was a process, but it did impact my credit score temporarily. Sometimes you might see wrong balance, a credit account that you don't recognize, that you've never opened, collections, a late payment you believe that was reported incorrectly, an old collections account, ID theft, or duplicate account. You can check your credit reports from 3 major bureaus. Equifax, Experian, and TransUnion. When was the last time you looked at your credit report? I'm not talking about credit score because that's the summary of the report, the actual report that has all of your accounts, all of your payment history. I recommend pulling the credit report from the bureaus once a quarter if you can, and take a look at the report to make sure there's nothing that's inaccurate on your report. Now that we walked through the 5 hacks, let's quickly clear some of the myths that I see often. Myth number 1, you need to carry a credit balance to build credit. I've heard this somewhere. This is so not true. Do not pay interest to credit card companies. Don't have a balance carrying. Make sure that you pay your credit balance in full every single month by the due date. Myth number 2, checking your credit score will hurt your score. This is also another myth. Checking your credit score is typically a soft pull, not a hard pull. Hard inquiries typically happen when you apply for new credit for credit cards, loans, and other things. Myth number 3, closing a credit card will help with your score. We talked about this earlier. It can hurt your utilization, so just think twice before closing your credit card. Myth number 4, perfect credit score of 850 should be your goal. Excellent score can help you get a strong interest rate and the things you need. You don't need to try to get to the 850. And lastly, let's talk about some things not to do. Do not open 5 credit cards at once because you saw someone online talking about travel hacking. Do not ignore your credit card statement because you feel overwhelmed. Do not close your credit cards because you're decluttering. Do not max out your credit limit unless you have a plan and can pay it off quickly. And lastly, do not check your credit score every single day and let it ruin your mood. Your credit score will fluctuate. If this video was helpful, please give it a like button and subscribe. That will help me a lot. And thank you so much for watching today. And let me know in the comments, what part of the credit scores feels the most confusing to you? I'll see you in the next video. Bye.